Welcome back, and great job making it this far. In video 1, we walked through how to set up your brokerage account and get approved to trade options. In video 2, we introduced what options are and covered some of the core terminology you'll need to know. Now, if you're feeling a little overwhelmed, that's totally normal. Options can sound like a different language at first, but remember, we're taking this one step at a time. That last video was just to help you get comfortable with the basic terms and ideas. Options are sometimes called derivatives because their value is derived from the price of another asset, the underlying stock. We learned that there are two types of options, calls and puts. We also introduced the delta, which tells us how much the option's price moves when the stock moves. As the stock changes price, gamma tells us how much that delta itself is changing, and theta tells us how much value the option loses over time, especially overnight. This might sound intimidating, but once you see it all in action, it'll make a lot more sense. Now let's set up our trading environment. There are a few popular charting platforms out there: TradingView, Thinkorswim, Webull, and TrendSpider. For this course, we're going to use TradingView, but most platforms offer similar tools, so use what you're comfortable with. On the right side of TradingView, you'll see a watch list. Almost every platform has one. You'll want to add the following stocks to your watch list: NVDA, Microsoft, Tesla, Netflix, Apple, Alphabet, and Meta. These are part of the Magnificent Seven, highly volatile, high-volume stocks that are great for options trading. When you open a chart, you should see candlesticks. If it looks different, search how to change it to Candle View. Candlesticks are green or red. Green means the stock closed higher than it opened. Red means it closed lower. Each candle has a body and two tails or wicks. The body shows the opening and closing prices. The tails show the high and low of that time period. Make sure your chart is set to your correct time zone. The U.S. market runs from 9:30 a.m. to 4 p.m. Eastern Time. Some brokers allow after-hours trading. Global markets like Europe start trading around 2 a.m. Eastern. Set your chart to 1-minute candles for one trading day. You can also zoom out to 1 week, 1 month, or 1 year. This helps when checking recent highs or lows. Let's add some indicators. First, volume. This shows how many shares are being traded. It helps us measure how strong the current move is. Bigger green or red volume bars usually confirm the trend. Next, VWAP. This stands for Volume Weighted Average Price. It shows the average price people are paying, weighted by volume. Set your VWAP to include upper and lower bands at +1 and +2. You'll often see the price bounce between VWAP and those levels. This is called channel trading. When a stock pushes up to VWAP plus a 4 or 5, it's often overstretched. Think of it like a rubber band. The further it stretches, the more likely it is to snap back. Now add MACD, Moving Average Convergence Divergence. MACD helps us spot momentum and trend changes. When the MACD line crosses above the signal line, that usually means the trend is reversing to the upside. When it crosses below, it might be turning bearish. Pay attention to those crossovers, especially with volume confirming the move. You'll start to notice a rhythm: green runs, red pullbacks, short pauses. It won't always be clean, but you'll start to see patterns. Let's talk about a doji. A doji is when the candle opens and closes at almost the exact same price. That happens when buyers and sellers are meeting at the same price. Neither side is winning. It signals indecision. When you see a doji, watch the next candle. If it breaks upward, that's a potential bullish move. If it breaks down, it could be bearish. Now let's talk about trends. If you see higher highs and higher lows, that's a bull trend. Lower highs and lower lows, that's a bear trend. Sometimes we're in a bull range, a sideways move with bullish bias. Other times, we see pullbacks, which are just short-term moves against the main trend. Let's also look at the super trend indicator. This one reads Level 2 Options Data. It shows whether there are more orders on the buy side or sell side. When super trend flips from red to green, that means buyers are in control. Green to red, sellers are winning. That brings us to level 2 data itself. This is the real-time order flow. showing how many contracts are waiting to be bought or sold. It can help you spot momentum shifts before they show up in price. It also ties into something called the spread, the difference between the bid and ask prices. A tight spread means you can enter and exit quickly. A wide spread means you might lose money just by buying in. When we place our order to purchase or sell an option, we will use the limit function to ensure we are purchasing and selling at the best price. Now zoom out your chart. Switch to 1 week or 1 month view. This helps you see longer-term trends, all-time highs, and major support or resistance zones. If a stock is approaching a 52-week high, it could break out or it could bounce down. Same thing if it's heading toward a 52-week low. This is where Fibonacci retracement can help. It's a tool that maps out potential pullbacks and continuations using natural ratios. We don't rely on it alone, but it's useful when combined with other tools. If your charting software lets you draw arrows, lines, or notes, enable that feature. Drawing support and resistance levels makes your setups easier to spot. Now let's talk about your screen setup. Ideally, you'll have multiple monitors. One screen for your charts, one for your options chain, one for your watch list or news. This helps you trade faster without switching tabs. And finally, you might make sure you're watching QQQ. QQQ is an ETF that tracks the NASDAQ 100. It's a great barometer for how tech stocks are doing overall. If QQQ is climbing, stocks like NVDA and Microsoft are probably rising too. If it's falling, it may be time to play defense. All right, let's take a breather. In the next video, we'll walk through an actual trade. We'll pick an option, analyze the chart, and explain exactly why we chose it. We'll watch the delta change as the stock moves and see how all these tools come together. You're doing great. Keep pushing forward. It's starting to come together now.